let me show you guys this, right? This is a classic manipulation, right? You can see here, guys, US SEC sue Coinbase 1 day after suing Binance. So if you have held on to Coinbase or crypto stocks, right? Most of them will have gapped down, right? Imagine you buy Coinbase, okay, and because of this news, right, the stock gapped down. Okay, can you see the stock actually gapped down? Okay, so this was what we call a swing low, right? Okay, can you see over here, guys? Let me just write down here first. Okay, gap down, guys. Can you see here? This was the gap down, right? You can see this bar open just below the swing low here. Just below the swing low. Just below the swing low here, right, is where a lot of the stop losses are being placed. Okay. I learned this when I was in the prop desk. this trick, right, that I was told last time. If for whatever reason, right, let's say there's some bad news. I don't care what's the bad news. But if the stop price gap down and open below the swing low on the immediate left side, I mean below this swing low, right? This is a U-shaped swing low, right? Open, and then by the end of the bar session, it closed as a green bar. Is a clear sign of the big boys loading up long positions against the bad news. And Coinbase did just that. We see on the gap down, right? It gap down below the swing low. Why? You know that before market open, right, there's this thing called matching. Before market open, there's this thing called matching because of the demand supply of the orders. Market maker will decide where to open the. And during the time, because of the bad news, right, market maker decide to purposely open just below the swing low, because he's using the panic and the headline news to force the market to open just below the swing low, the swing low to trigger all the stop loss, so that when the market open, right, all the stop loss will be triggered. Ding! Then the market maker can absorb them straight away. And by the end of the session, if the bar remains a green bar, it means that the market maker basically is holding up the price. And it's very clear that because why they're holding up the price, because likely they have bought in and then they want to maintain the price higher. They don't want, because they got in a good price, they don't want it to push down anymore. Can you see this over here, guys? Can you see this? This is what I call chart printing. This is what I call chart printing, guys. You see, imagine if you never sell, then later you see these two bars here, these two red bar here. This is what I call chart printing. It's to bluff people that, okay, you don't want to sell, right? You don't want to sell, right? Never mind. I bring red color. You want to sell? Never mind. You want to sell? I can tell you, if someone never sell and he got lucky by he didn't sell at the bottom, and then later you see the red bar like this, right? Some people may thought that they got a better price to sell now, faster go and sell. Or those who happen to buy, they may be afraid that the price may go down all the way. But guess what? This is what I call candlestick printing. Is fake. It's to bluff traders to let go more of their position. Instead, I went in to buy. Right, I bought in when I saw that market makers actually was accumulating the stock, even though I didn't know why they're accumulating the stock. To be frank, when I buy, I was like, got lawsuit. Then people say you cannot predict lawsuit, right? What will happen? But my principle has always been to follow the market maker. They know something. And true enough, even though there's lawsuit going on, the stock price keep going up. Have you ever seen a stock, right, that got bad news but the stock price keep going up? Or have you ever seen a stock that got good news, right, the stock price keep going down? This is the stock market, guys. Welcome to the stock market. The stock market is manipulated. They are all based on the interest of the big boys. I can tell you why the price go up. The one clear reason why the big boys accumulated here. Market makers accumulated here on the bad news. Why they accumulate, I don't know. But because they accumulated, that's why it goes up. As simple as that. Okay, and usually, right, you thought by the time you know the real news, right, it's too late. A lot of people always want to ask, hey, why the thing go down, why the thing go up? I can tell you by the time you know why the thing go up, right, the thing will drop. By the time the good news really come in, oh, SEC will not sue Coinbase, then the stock price will drop. It's like that one. This is the stock market. Understand? So focus on the price action. It will help you to be on the right side. Okay? To stay on the right side. Okay? Even though we know that XRP is definitely is a fundamentally good crypto. That was how I made my first pot of gold in crypto in 2016. Right? But for many years after that, it was just like dead lah. Right? Not doing much. Then 2022 the dragon wake up a little bit, then die. Then for I think 3 years, right, it was like sideways. Until suddenly, right, I saw using this bullish FS false bottom scenario in the monthly chart. I saw that this is a pattern based on price action manipulation, a bullish false strike bar from false bottom scenario. This is something I teach my students. And I told them that XRP dominance chart was forming a DR1 or bullish FS false bottom. So this suggests that something is brewing for XRP narrative as long as dominance hold above immediate swing low. Can you see over here? It was still at the lows here. Right? And that was when I loaded up about almost 200,000 of XRP went to as high as, I would say, $3 plus. So that was about 8x, almost 8 times from the bottom. Along the way, my strategy also works very well in crypto market. In fact, the crypto market is super manipulated. Right? That's why it rhymes with the crypto market very well. Whenever there's a certain manipulation signal, you get in early before the obvious move. That's how you get very asymmetric return. I mentioned about this thing called big boys and market maker. So I mentioned big boys, dark force, whether it's big boys, dark forces, or insider, the correct technical term is called market maker. So who are the market makers? The market makers, right, can be a hedge. I use usually a hedge fund or fund house that's involved in what you call market making. Understand? So what's market making? Market making is like a money changer. When you go, let's say you want to go holiday, right? You go to the money changer. Let's say you go to Japan for holiday. You buy and you sell. Like for me, I exchange my Sing for yen. If I buy and sell at the same time, I'll lose this thing called a spread, which is what the money changer make, because the money changer is not there to exchange your currency for free, right? So in the stock market, it's the same thing. The market maker also make money from the spread. For example, this is my UOB KN account. It's a Singapore brokerage account. It works the same as our US account, like Think or Swim, Interactive Brokers. Okay, so for example, like DBS, I think Adam mentioned just now, right? Adam has a position in DBS, right? So this is example DBS stock, right? You can see over here, this is a $55.06. There's like 11,200 shares here. Okay, right, 11,200 shares here. Okay, you can see all these so-called buy orders, sell orders. Let me share with you guys. You see all these buy orders, sell orders, right? 90%, guys. 90% of the buy orders and sell orders that you see over here, 90% of the buy volume, sell volume that you see over here are placed by the market maker. Less than 10% are placed by people like you and me. You understand? So whenever you buy or sell in the market, whether the US market, China market, Singapore market, crypto market, futures market, FX market, 90% chance you're going to hit onto the market maker. It's normal. You just don't want to be on the wrong side of him. You see, the market maker is also a trader. If he can manipulate 90% of the traders out there, he will let the 10-15% of the traders go. You understand? Because he know he cannot manipulate 100%. There will be like people like me, there will be people like the more savvy investor traders, right, will be able to ride alongside with him. you want to be that 10-20% of the traders. Understand? Can anyone be the market maker? No. You need to be the what? lot of people ask me, can anyone be market maker? No, they have to be the what we call the designated market maker. Designated. So to be a market maker, the exchange will have to basically screen through the person whether they got the technology, because to run the market making algorithms, right, usually it's done by a quantitative firm. Understand? To run the algos for market making. Oh, and of course they need to have the deep pockets to do market making. Right? Okay. Market maker make money from the BNRs. They also make money from this thing called the retail flow. In fact, I would say that retail flow information, right, is the most lucrative for the market makers. So what's retail flow? For example, guys, DBS $55 right here. Okay, $55.06, 11,200 shares. Let's say there's some good news, right? Traders went to buy 55 and 7 cents, 55, 8 cents, 55, 9 cents, 55, 10 cents, and so on. Let's say there's some good news. You don't care what's the good news. Let's say there's some good news. Traders went to buy, right? And push up the stock. Remember this, the market maker is the guy who put up all the orders there. The market maker is the guy who put up all the sell orders, 90% of the sell orders. So if all the retailers went to buy, right, the market maker will know what is the average price that all these retailers came in to buy. What is the average? I mean, after all these retailers buy, what is the average price? Because of the good news they buy, right? And how much they buy. How would the market maker know? He know because imagine you are the one, right, who put all the order, 90% of the orders at every level. When people hit onto you, you will know. You know how much people hit onto you. You know how much, what's the average price that they hit onto you. And if you know this information, what can you do? If you know this information, what can you do? You can do what we call a squeeze. You can do what we call a squeeze. So I can tell you high chance, right, if too many people buy, right, market maker will purposely do what we call a squeeze to push down the price. Until most people cut loss, you want cut, don't cut, go lower. One cut, go lower. Until a point where most people cut already, right? Or they got liquidated already, right? Then the price will start to recover. This is classic market manipulation. Understand this? Okay. Okay, so you also need to know that about this, guys. This is what I call demand supply manipulation. Okay. A lot of traders think that if there's a lot of people buying a particular stock price tends to go up. Same thing, a lot of people thought that if there's a lot of people selling a particular stock prices tends to come down. Okay. But let me share with you this. If you know this, you're better than 90% of the traders out there. If there's a lot of people buying a particular stock prices tends to come down. If there's a lot of people selling a particular stock prices tends to go up instead. Why? Because the stock market is not a fish market. In a fish market, if everybody buy the same fish, the price of the fish will go up. It's just like Chinese New Year. Not enough fish, right? The price of fish will naturally have to go up. But the stock market is not a fish market, because stock market consists of this guy called the what? The counterparty. You have this thing called a counterparty interest. Your counterparty in the stock market is the market maker. I call him MM. Okay? It means that when you buy, right, you buy the stock, the person who sell to you will be the market maker. You need a counterparty, right? You want to buy, someone has to sell to you, right? Market maker is the guy. Like you guys have learned just now. Market maker control more than 90% of the liquidity. So whenever you buy, 90% chance he's going to hit onto you. Market maker will sell to you. And if you buy too much, you will become what? Net short. Okay? Even sell stock, you need someone to buy from you. The market maker will be the one. Most of the time, you got 90% chance you're going to hit onto him, right? Just like in April this year, right? When people panic sell, cut loss at the bottom, market maker is absorbing all these sell orders, turning long, right? Market maker turning long and become net long. And when people cut too much, market maker become net long, what happened? On the slightest good news, right, the stock price will just spike all the way. Do you remember like April? I think that the day where Donald Trump announced the pause, right? Slightest good news, a pause only, right? The stock price just go rip all the way up. The only reason is because the market maker is super long already. He's super long, right? Because a lot of people cut loss at the bottom, right? So you need to understand this concept, okay? As we go more deeper into market manipulation,